Hey everyone, welcome back to Crypto Cash. May the 4th be with you. I hope you're having an amazing day. We're taking a look here at Bitcoin, seeing what's going on, of course. We're going to talk about some important stuff. What's going on with Bitcoin dominance? It's increasing. Alts are bleeding out very hard today. And we're going to talk about, a handful of other features too that are really important to note, specifically with liquidation data and open interest positions. So if you're new to the channel, help us grow the community. If you could, please, follow us, like, subscribe the whole 9 yards on YouTube and Twitter, and make sure you enable notifications so you can be abreast on all the new features and just news coming out. We have a tremendous amount of knowledge and data coming through here. Got a big team working together to bring you a lot of relevant information. So be sure to check out our Twitter there and enable notifications. It really does help. And then obviously, if you could, become a community member. Definitely love to get to know you better if you want to become a better trader. CryptoCash.tech is a site, link down below. Quick little note here, we took some healthy profits, 32% yesterday from Ajax, and of course APT, nice little 20% short there in 8 hours. So a lot of cool stuff coming on there. We're also bringing day trades to the community here within the next week or two, just waiting on the final little details to kind of unfold. So let's jump in here to a couple of things here first. All right, so let's take a quick peek here first at CME futures, kind of see what's going on. I don't think we're going to see much gaps, of course, but generally speaking, it's important to recognize that we had some gaps, of course, more importantly here in this range here. So we kind of see right at the 28.6 upwards of the 29,000. So what we want to do is just kind of draw out a little bit of a chart here, kind of see, because there's a good chance we could get that fully filled here. Now we're going to go ahead and go with red because it hasn't been filled yet. Generally speaking, that's something we want to pay attention to and kind of see if that gets filled, because all the gaps here from recent were able to get filled. Okay, so cool stuff there in that sense. Just kind of noting that we could see a bottom at 28.6 before the next leg up to essentially fill that gap. Okay. Now, there's no guarantees it's going to happen, but that is definitely something to pay attention to. That said, we are looking at Bitcoin dominance now, and we can see that Bitcoin dominance is starting to increase, and of course, altcoin dominance is decreasing. Big surprise, money goes into Bitcoin, not altcoins. Profits are taken from altcoins going into Bitcoin. It's a full cycle, right? So that's kind of standard procedure. Another thing to look at here too is this is the US dollar index, essentially, where we can kind of see all the volume across all exchanges essentially. And what this does, it tells us that Bitcoin is seeing a lot more volume yesterday than, of course, today. Obviously, the trading day hasn't closed yet. We got 8 hours left in this candlestick, but for lack of better terms, we are back up above that bearish area, if you will. We're now more so neutral. Okay, now again, this is just a chart that I drew up. This isn't official by any stretch, but the bottom line here is we have, a lot of volume support here in this bearish area, and then we also have a decent amount of volume here as well in neutral, where the price action spent a lot of time here recently. So it's kind of more so like a mindset. When the price gets higher, it's a little bit more neutral, where people are a little more concerned when the price is in the 27 to 28,000 range. Okay, we're not there yet, and we are ascending positively here. It's a very good sign. Okay, so again, make sure that you stick around to the end here. I want to there's a big picture we need to kind of understand, specifically with high block capital data, and we're going to take a look at that here next. So let's go ahead and jump right in to high block capital. Okay. So this is where things kind of get interesting, at least to me, of course, because I like to see all the back-end stuff, right? Now, back-end data, we see the volume there. It's kind of, it's increasing, which, of course, yesterday there was a lot of trading volatility based on the Fed meeting and the interest rate, 0.25% increase that was baked in, so to speak, which is why the price came up. But we had a double bottom leading into it, so it wicked down and kind of wrecked a lot of shorts, a lot of longs that were long on altcoins to the downside. So that being said, we were just fine. As a community, we closed all of our positions minus our Bitcoin long leading into that trade. Now, that being said, what we want to look at here is a few things that are important. First of all, liquidation data isn't too crazy right now. Okay, so we'll be able to see that in open interest. There's a lot of longs at 28.5, and there's a lot of shorts at 29.5 roughly. So we're in that $1,000 range. So that's not super relevant. What is important here to understand is that open interest is coming down. When open interest decreases and the price goes up, that tells you that it's a weak price increase, and there's a great chance of a turnaround because of the simple fact that we have less volume effectively. Okay, open interest is corresponding directly with volume in a lot of ways, and to me, I love to pay attention to volume. I think it speaks very loud. Pun intended on that one, but in general, it's something important to pay attention to, right? Regardless of the circumstances, you want to note that with volume decreasing, then there's a situation in which the price can no longer sustain that point, okay? Especially if it's overextended, and we'll talk about that in a minute. That being said, though, taking a look at global bid-ask ratio here, we see more bids still than asks. It is depreciating a little bit, though. In other words, there's less confidence in the price point where it's at right now. We can take a look here. This is a 12-hour chart for liquidation, and this is just kind of noting here that there was a lot of positions at 28.6 that basically closed. They weren't necessarily closed out because they were liquidated, they pretty much just close their position altogether. It really just kind of tells us that longs likely are adjusting their stop losses or their trades that haven't been filled yet, or removing them. Okay, giving us a little bit more bearish sentiment, but also bullish too. And I know it sounds kind of contradictory, but here's why. Taking a look at the open interest here, we can see the most amount of volume of open interest is right here at 29,300. Okay. That said, those are likely going to be shorts. If we take a look at that, we can see that does reaffirm the fact that a lot of shorts are hedged heavy at 29.3. So they're in profit at the 28.9 mark right now. Okay. Taking a look at the longs, we can see that they are also in profit here at 28.7 for the most part. So the dip was bought right there, and coincidentally, that's a Fibonacci retracement level. A lot of longs went long there. Okay, so really just tells us that we have this nice little price gap here between 28.5 loosely and 29.5. Okay, so I think that's important to recognize because it kind of helps us understand kind of where we're at. You can kind of see that's basically between these two Fibonacci retracement levels where the price action is kind of trending. Okay, so again, cool stuff there in that sense, but what we want to look at next is some standard details here. Let's just go ahead and reiterate a few things here. First of all, the monthly, we got the moving average here at, we're above the 50 and below the 20. Okay, so we're kind of working ourselves into a little bit of a wedge there. Inevitably, within a couple months, we'll see if we can break above the 20 or stay above the 50. Positivity here is that we're above the 50. We're gaining momentum as well on the stochastic RSI, and we are closing officially still, so far, again, we're 4 days into the month, but we closed officially at above 50 in the RSI. We also have a MACD convergence on the horizon too, so these are all very positive signs in the overall sense of things. So the price does pull back, we should still see a continuation to the upside, even if we do get a correction in the near future. Okay, so that to me is extremely important. Now we're going to skip over the weekly because we covered that in detail yesterday, but the bottom line is that the weekly is still looking good. We're only halfway through the week. We'll review that at the end of the week. For now though, at this point, we got some big picture positivity. We've also got the fact that the price is moving above the 50-day sub moving average. We were testing it for a couple days in a row, and of course we stayed above. That's a very positive sign. We're also now above the 20-day sub moving average for the moment. So we can close at the 28.8 mark for now. I think there's a good chance of a long position doing much more benefit than to the upside than trying to short your way into it. Okay, because again, we're looking pretty positive here in the last couple of days. Furthermore, we're still above 50 on the RSI. That's a fantastic sign, and we have a potential reconvergence on the MACD. This is a long ways out, trust me. It's not there yet, but it could very well converge. Just say we retest 30,000, and when we break, inevitably we'll see that convergence, and we will be off to the races at that point. We could even see a run to the 34, 35 mark. We'll talk about that at another time because I do like to do kind of a large macro analysis, but for the sake of time here, let's go ahead and wrap things up and go ahead and move on to the 4-hour time frame. We can see we're above all three moving averages, or pretty much above. The 50 is giving us a little trouble, but for the most part, we're above the 200, which is, to me, the more important one. We're also remaining above the ascending trend. We're over 50 in the RSI, and effectively depreciating, or more importantly, on the potential horizon of a divergence on the MACD. Is that good? Is that bad? Well, right now it's not. It's neither, but it could become a potential bad thing. We are also seeing kind of a double top on stochastic RSI, whereas we start seeing those lines intersecting in a bearish type of way, and that does tell us the momentum is starting to dissipate. Doesn't mean it's going to turn itself around, but that doesn't show a lot of strength. Okay, so to me, ultimately, that can, kind of putting all the pieces together here, the 4 hour is fairly neutral. I don't see like a massive breakout potential, but I don't see anything wrong with it either because we have higher lows and effectively higher highs. Okay, that continues to maintain itself. We're going to be in good shape. The only concern that I have is this bear flag type of pattern where you see the price action working itself into a channel and it's coming from the upside. Therefore, it'll potentially continue lower. Okay, that is a potential reality. Okay, so keep in mind that's an opportunity there in either direction, depending on how you look at it. That's why we wait for confirmation and wait for the candlestick closures to ensure that we know which direction it's heading first. Unfortunately, a lot of false positives have been occurring here recently with some manipulation where the price shoots up. You think it's going long, it comes right back down. And the same thing occurred on Sunday too. Close your short, open a long, price comes right down. A lot of false things going on right now, unfortunately, and it's just boils down to manipulation. No other real way around it, because even the best technical analysis in some of these situations doesn't matter too much when you have fundamental catalysts. The fundamentals we saw yesterday with the Fed rate, and that was all well and good. We saw this funky candlestick, price goes up and down, and all of a sudden it just takes right off. Now again, that was mostly baked in, so we kind of expect the price to continue higher. But once again, it's still an interesting phenomenon that occurs consistently in cryptocurrency. All right, so let's just go ahead and wrap things up with the hourly and call it a day here. We are officially above the clouds. This is a very positive sign. Only dilemma is that we're running out of momentum here. The lagging span is intersecting with the price action, so a long position right now may not be more. This indicator is telling us it's not super viable to get in at the tail end of this run. It's also telling us that we're above the cloud, which is positive, and the conversion line's above the baseline, so we have momentum. Okay, we just don't have enough of it yet to confirm or justify a long position. Now let's take a quick look at TD sequential and see if there's any indication here of overextension. We can see previously the price comes up to a 9, pulls back. We hit another 9 here, goes sideways, and now we corrected ourselves. Okay, so keep in mind we are concurrently making higher lows there, and we broke that pattern to establish lower lows, and so far lower highs. So if we can continue to establish higher lows, that to me would be a good trend reversal here and to ensure we're going to be in good shape. But to me, with everything that we've seen here so far, the 4 hour kind of being bearish / neutral and the larger time frames, it makes more sense for the price to continue to increase than it would decrease. But we got to be mindful of the fact that we do have that bear flag type of pattern here occurring, and that if volume starts to dissipate, then we're going to be in a position where the price will come down. Okay, so we really want to just pay attention to the volume too, and kind of maybe see what the volume weighted moving averages are telling us. We're still in good shape there. I really think that we're okay for the moment, but if we see a closer here today, because here's what we want to see for confirmation, right? Previous highs, this level here, would see pretty indicative here, right? So 28,800, we can see the price wicks up, gets rejected, wicks up, rejected, and breaks through officially. So we kind of got this range here between 27, 28.8, where we can kind of see the price action rejects out and continues to hold its support. In fact, let's just go with the rectangle here. Be a lot easier to kind of see. So this is our little support range here. We're going to go a little lighter there so we don't have to be so blinded, but generally speaking, that's the range we're looking at here, okay? So I'll send out an updated price analysis on our Twitter, as well as a potential prediction on what's going to happen next. But these are some positive signs here. If we can hold above or close above 28.7 today, I think that would be kind of proof here that we'd be good shape. And the reason why, because there's some previous resistance here. The price could not pass 28.7 for some time. We broke above soundly. Now we're coming back down to retest. It's really common practice for the price to bounce off that level. So if I were to be a gambling man here, which I'm typically not, I would gamble that 28.7 should be the newest low, and that should effectively be the bottom, and the price continues from here. Most things are pointing up right now, but we still have some indecision, and I'd recommend waiting on taking a position here, unless of course you are considering some alternatives. So be sure to check that out. Again, our Twitter, I'll go ahead and update these things here pretty consistently, but we have some really awesome features in there, and it's really cool. So be sure to enable that. And thanks again to everyone who's been able to communicate and openly kind of work with us here. It's really awesome to be able to kind of communicate openly with you. So be sure to check that out, of course. So I think that's really all we have for you here today. We'll take a look here closer at the larger time frames. There is, keep in mind, there is a head and shoulders pattern we got to pay attention to. We may have further retracement here on the macro. So again, as per usual, conflicting information. We kind of got to go with our instinct on this one. And my instinct right now is to consider a long position, but to wait also for confirmation that we get a close here today in the next 8 hours above the 28.7, 28.8 mark. Okay, so I think that's important to close right there at that level. Thanks again for watching. Greatly appreciate you all. Like, subscribe, follow if you haven't already, and I will look forward to working with you. Have yourself a great rest of your day. Talk soon.